This is Nate Dodson, and you're tuning into And This Is Why, the podcast show. A show where we help you take your business to the next level. New episodes every week streaming on your favorite streaming platforms. Enjoy today's episodes. Hey guys, thanks for joining today. You know, I've got here one of the most amazing people. It's Jane Lynn, who I've literally known forever. So I'm gonna go ahead and let Jane tell the story of our history. Jane, where did we come from?
Oh wow. Our history dates back to age
Prehistoric times.
yeah, pretty much. Age 14. Because just 10 years ago, right?
Yeah. Time flies when you're having fun. I mean, these grades keep popping out.
Right. Many, many, many moons ago. When we were in junior high together back in Texas. And we've traveled far, wide, over many, many courses of many years, destinations, and have now landed in where I am based in Los Angeles, California. And
I'm still hanging out in Texas.
State of Texas.
Yeah, well, it's it's interesting because we had very similar upbringings. We went to the same college, but then ended up in two completely different tracks. True. Jane, we'll get more into your background, but you very much went the professional direction with some amazing positions with some of the biggest companies in America. I went the entrepreneurial direction of just kind of starting my own stuff, doing my own things. I love that we have both kind of ended up very similarly in terms of financial independence and enjoying life. And so that's really what we're here to talk about is, I'll let Jane give more of her background, but this little lady, she's retired and loving life already. And so she's going to share a few of her secrets of how to make it happen. And then I'll add my 2 cents along the way as well. But Jane, introduce yourself.
Thank you. And I actually don't love that term retirement or early retirement because, like you said, for us, it's more about financial independence and just having the choice or the freedom to choose how we want to spend our time. So you'll hear me use the term financial independence or FI synonymously with early retirement. But just to take a step back and like Nate said, we took very different paths. Up until about 5 years ago, I was on a pretty straightforward path in life, and I had led marketing innovation efforts at Google and Zappos and Disney. Co-founded a tech startup that ended up getting acquired in the daily deal space. But even though I had hit a bunch of these milestones, I was so burnt out and was oftentimes living for weekends and holidays, wishing the week would go by quickly. And also hating that I was wishing for time to pass because I didn't want my whole life to pass me by. So I really at one point decided to take the reins and make some big changes in my life that have led me here today. But I want to start with sharing that I think, when I look back, I think the start of my journey was really early on in my career. Back in the 2008 era, I was laid off. And while many of us get to or may experience a layoff in our lifetime, I got to experience 3 of them in a row. And I say got to because it's that gave me 3 times the fuel to decide I wasn't going down like that. And it kicked off my quest to get out of the matrix, so to speak, and write my own life story. And before that 3rd layoff, I had co-founded this tech startup that I had mentioned as sort of a side hustle. My co-founder and I had worked on it just in our spare time. So it was sort of on the back burner given that there was so much else going on. So as soon as I got laid off, that time I saw it as the universe's sign to go all in on bootstrapping our startup. So we launched what we called Cravist. It was a daily deals dashboard, so to speak, that consolidated the Groupon and Living Social and the likes experience under one roof. And about a year later, the startup was acquired. And that's what led me to then working with Zappos in Las Vegas, and then Google, Disney, and then to now being just me. And I still consult occasionally when I have exciting projects in front of me. So how did I go from layoffs to financially independent? That's a fair question. Well, when those layoffs happened, I think it really helped me think differently about money. And it's the mindset that started to naturally change my behaviors and help guide my decisions. With those 3 layoffs in a row, I felt like I needed an emergency fund for my emergency fund. And when I asked myself why I felt so stressed at the time, well, part of it was, yeah, I was afraid that no one would ever hire me again. And the other part of it was that I realized if I didn't have a car payment or eat at nice restaurants and go to bars every weekend or upgrade my wardrobe every time I got a raise, then I wouldn't be so stressed. And I didn't know it at the time, but it's those shifts in my mindset that began with those layoffs that have been the biggest contributors in me becoming financially independent. And I want to say, because I am no expert in personal finances, the stock market, definitely not. And I'm not even interested in becoming an expert in the financial markets. But my point is, you don't have to be to become financially independent. And so there's this quote by Anthony Moore, if we can bring that up on the screen, because he says, to achieve what nobody else has, you must do what nobody else does. And I love this because I think it applies so well to becoming financially independent. And what I want to add onto this quote is that you must think like nobody else thinks. And that's my point, is that a lot of this really has to do with mindset. And so to get into that, I wanted to share how similar planning for a financial independence is a lot like planning a trip. So when you start to plan a trip, you're planning this fabulous vacation, right? Where do you want to go? Nate, where do you want to go? Let's say we hear there's
Oh, I want to go to a little island where I just hang out on the beach, maybe sell beer, catch some fish for dinner, and that's the extent of my dream.
Yeah, that sounds pretty awesome. And a lot of times we hear where other people want to go or what other people want to do, right? So I remember, I think it was like in the past year, so many people are going to Hawaii. And I found myself hearing every single one of my friends talk about Hawaii this, Hawaii that. And in my Instagram feed, Hawaii was filling my Instagram feed. But even if that's the case for you, and for you, your friends may be talking about going somewhere different, but all you want to do is sit on a beach with a beer in your hand. Whereas in this example, someone else may be more into exploring ancient cultures, even though all their friends are talking about Hawaii. Maybe it's Machu Picchu that you're fascinated about and really want to go. But my point here is that just because everyone's talking about something or doing something may not be true to yourself. So you have to really tap into what is authentically you in terms of what you want out of your lifestyle. Because for so many people, we live as we're shown and taught, and a lot of it is on autopilot. But if you really stop to think what you want out of your lifestyle, do you want a lavish lifestyle or do you want freedom of your time? Now, I'm sure a lot of us say we want both. And while it's not impossible to have both, which one do you want more? And in this example, it's not really that I'm trying to compare like Hawaii being the lavish lifestyle and Machu Picchu being the freedom of the time. I'm just saying we have to choose the destination or lifestyle that is authentic to us. And so for me, that lifestyle is my priority is to have freedom of my time. And so to continue on, that mindset or thinking and having that priority be my compass has driven a lot of my behaviors and decisions. So I think time is money. I know we hear that, it's a cliche, but time is our most precious resource that we can't get back. So by choosing freedom of my time as my priority, like I said, these decisions became easier. And I think of time as money in the sense that I was considering getting a new car. And I thought I could get a new car or I could continue to drive the one that I have. And that money that I would have used to buy that new car, the amount of money could give me 8 months of complete freedom of my time where I'm choosing the freedom of my time. It could cover 8 months of my living expenses. And the same thing with fine dining and going to bars for a year. If I think about how much I would spend every weekend on going out, and if I just pulled back on that, it could give me 2 months of bootstrapping time for my startup. I'm taking that 2 months. And same with the clothing habit. If I didn't keep upgrading my wardrobe, I could have a month of dedicated time to go see my family in Texas. So that's how I started to think about time as money, and it made these decisions. I was deciding a lot of times I found myself, I'd rather have the things on the right here than the things on the left. And so once you've thought through, yeah, I want more freedom of my time, then the question becomes, how do you get more freedom of your time? You can lower your expenses and you can increase your income. Those are the two very basic things that you have to do to get more of that freedom. Because if you think about it this way, you saw that those little chunks of time add up. And the thing is, you have to add up all those chunks of time to equal enough time for you to retire or be financially independent. So when we think about how you do that, one side of it is lowering expenses. And what we just talked about is sort of making choices between luxuries and freedoms. But another very important way that you can lower your expenses is to live below your means and also to prevent this lifestyle creep. So living below your means not buying things you can't afford. And while that may sound obvious, it's, for example, never keeping a credit card balance. If you can't afford to pay it off in that month and it's an optional thing, then you can't afford to buy that thing. That's how I think. And also with the lifestyle creep part of it, I used to upgrade my lifestyle, buy nicer things every time I got a raise. And I want to tell you about when I was in my 20s. And Nate, you might remember this because I leased myself a Mercedes hardtop convertible that I would drive to work every day. Okay, I would drive an hour and a half through LA traffic, belting out, because I ain't no hollering back, girl. I think it was like 2007.
But you deserved it. You made it. So that makes sense.
Well, getting a stare down from fellow traffic warriors on the road. And all while living in a studio apartment and making an annual salary of probably close to what that car cost. And you know what? Like you said, Nate, I deserved it. I have no regrets. But there are just some things that, because I have okay, so my point being there, I have no regrets because there are just some things that we enjoy at certain stages of our lives. Like these days, I don't even want a convertible. Keep me out of the sun because I don't want sunspots and wrinkles, okay? But the thing is, I loved the car. It brought me so much joy. But if I had kept on that track and buying nicer car each time or upgrading each time that lease was up, I would still be working my ass off to pay off those nice things and trapping myself in the rat race. So the next car I bought and kept for 12 years. So that's what I mean by sort of living below my means. And living below my means also meant getting creative on my social life, because to catch up with friends, instead of going out to these really nice restaurants all the time, nothing wrong with that. Still love the Michelin stars, but I started hosting dinners at my house a lot more often, or suggesting more casual venues, or just going to coffee to catch up with friends instead of always just defaulting to going to dinner. It used to just become like an unconscious habit. It's like I didn't even appreciate these nice restaurants anymore because it just became something we did. So really just being more conscious about your decisions and making sure they are all intentional. And pulling back on things that I used to spend money on didn't really feel like a sacrifice to me once I got in this mindset, because I wanted freedom more than I wanted these things. So the next thing on this list, taxes. Taxes are a massive expense. A lot of us don't think about it that way, but they're a huge expense. Taxes are boring, but knowing the ways that it can help you become financially independent is not boring. So there are so many ways to optimize taxes, and I'll just share one example of something I do, just so you can see the way to think about it. If you generally make too much to contribute to a Roth IRA, or maybe you have inconsistent levels of income from year to year, like if you're an entrepreneur, you can use your low income years to convert pre-tax retirement savings in a traditional IRA to a post-tax Roth IRA account. And what happens when you do that is you have to pay the taxes, the income taxes on it the year that you convert. That's why you only want to do this when it's like a lower income year and maybe you're in a lower tax bracket. But the point in doing this is that you convert it, you take the income tax hit on it, so you pay the taxes that year. But then from that year on, those funds grow tax-free, so that when you pull them out, when you pull out the money in your retirement, you don't have to pay the taxes on the gains of that. And by then, it'll have grown to a much bigger amount than what you pay taxes on it for, theoretically. So Uncle Sam doesn't try to make it simple for us, but learning how to work the system can make a huge difference in being able to lower your expenses. So on the right side here, so increasing your income. So besides already earning the income that you do and you're accumulating wealth with the income that you're earning, it's also about working smarter and not harder. So I worked plenty hard all my life. That was instilled in me at birth by my immigrant parents. But slowly I learned through burnout, through the hard way, to work a little smarter too. So for instance, I would switch jobs every 2 to 4 years to get a 15 to 25% salary increase instead of the standard 2 to 3% a year that a lot of companies give. And after I started transitioning out of traditional work in around 2018, I took on consulting and contract engagements where I was getting close to the same pay, but without the titles. And to some people, there may be reasons why that's important to them, like the titles and to reach their goals. But for me, even though I loved growing a team and having that, it was being able to have the time and the mind space to also work on other things that was more important to me. And so to me, the titles didn't matter. I was happy to forego the title and the roles that I had previously in order to have more time and balance and still be able to earn the income to help me reach my financial goals. Plus, I still really enjoy consulting periodically because I love the energy of working with inspiring people to be able to build something together. So that's not something I wish to completely eliminate from my life. And also, so to the second point here, making your assets work for you. So besides the obvious of investing in the stock market and other investments, I started to see how I looked around. It was like, how can I put what I already have to work for me? And as an example, I used to own the house that I lived in, but have since become a renter. I know not often do people think of going that the other direction of going from a homeowner to a renter, but I did that because that home wasn't making me as much money as it could if I rent myself a simpler home and use that capital to make more money in the market, in investment properties. So the homes that I own at this point are investment properties, and I rent one that I live in. So maybe think about what you have that you could be making, that could be making money for you right now. Maybe it's renting out the studio in the back of your house that you never use. That's just one idea. And so another point here is just you have to negotiate and advocate for yourself. Besides probably my first job, I've negotiated every employment and consulting contract that I've ever gotten. I negotiated travel expenses and a corporate apartment for a consulting contract when I was working with Zappos in Las Vegas while I was living in LA. And eventually, before I sold that home, I rented it out at the time while I was traveling or while I was working in Las Vegas. And then when I rented it out, I would just travel on the weekends or had friends come visit me, which it wasn't hard to convince people to come to Vegas for the weekend. And so those trade-offs were worth it to me. But maybe you have a family and this doesn't seem realistic. But in your case, you could do other things that I couldn't. Maybe it's living abroad with your entire family at a lower cost of living area around the world for a couple of years while renting out your home. Or maybe it's to downsize your home. Just a few examples. So along to our next step in our travel analogy. So once you've decided you're going to Machu Picchu, even though everyone else is going to Hawaii, you need to map out your trip, right? You're going to have to take a look at what else is around in Peru. There's Lima, there's Cusco. Where are they in relation to each other, to where you're going? And in the same respect, you have to map out what your financial picture looks like in order to even figure out what it takes to get to financial independence. So, where does your money go? Do you know? Do you have an idea of how much you spend on subscriptions or on dining out? While you could use a spreadsheet and track all this manually, you could also find a bunch of online tools that can help you understand where your money goes and budget. So,
Are there any that you recommend?
yeah, so I used to love using mint.com. So mint.com was great at tracking expenses, but they recently got acquired and now they're a part of Credit Karma. So I can't vouch for that. And yeah, so I know that in the FI community of people who are also working towards financial independence, a lot of people really like one called YNAB, and it stands for You Need a Budget. So that's what I've put on here, ynab.com, as something that you could look into as an online tool to track your budget and expenses. You can also find these resources. I put links to these resources on my website, janelinhq.com, if you want to access them from there. And on the other half of this is tracking your net worth and seeing where you're currently at. Because if you don't even know how much you currently have, there's no way you could know how much you need to get to your goal. So this tool I can vouch for. I love this tool here to track your net worth. It's called the Empower Dashboard. It used to be called personalcapital.com if you've ever heard of that. And you can still go to that website and it'll take you to the Empower Dashboard. But basically what it does is it's also an automatic aggregator. You can link up all your different accounts, your bank accounts, brokerage accounts, your houses or other assets, your liabilities, and it just automatically tracks and calculates as they move up and down according to the market. And also it helps you. I really like how you can see benchmarks. So I can see how my portfolio is performing compared against the S&P 500 or the total US stock market, to see how well you're doing compared to the overall market. So those are some tools to help you just be able to get a full picture of your finances. So once you have the full picture, and once you've determined your points of interest in Peru, if you're going to plan your trip to Machu Picchu, then you can route your travels, right? There are so many ways to reach the same destination. So you're looking at a map, you could fly into Lima or Cusco's. You could take a train, or you could trek for 4 days to get to Machu Picchu.
I was going to say that I think even better than these examples is your example. What did you do when you decided to do this? That's the interesting part.
Yeah, I'll get to that. So, because there are, like you said, like you're saying, there's so many different ways to get there. I will absolutely share how I got there. So, in terms of planning your route, there are multiple scenarios, right? There's so many things you could be doing differently. Like, do you buy an investment property? Do you sell one or continue generating cash flow on an investment property? And that's actually, in my case, what happened is that I found through scenario planning, what I'm going to walk you through here, is that I didn't think that I could retire early for a long time until probably 2020 is when I really got a handle on how realistic this was for me. Because what happened was I always thought I was so far off. Like, I thought, there's no way I'm even considering this until I'm in my 50s. But when I started to understand how to track everything in these scenario plans, and there's tools, don't worry, because I used to try to use a big, hairy spreadsheet, and there's so many nuances. I was putting so many exceptions. And like I said, I'm not an expert at this stuff at all. So I was so happy to find a tool like projectionlab.com, which does it all for you. You just have to put in all your different assumptions and variables. And what I mean by assumptions is like, this is like the rate of return that you can expect from your investments. And in general, if you just put all your money into the total stock market, so say an index fund that tracks to all the US stocks or the S&P 500, you're going to get about a 10% annual rate of return over the course of many, many years, 10 years, more. But to count on that, there's other factors like inflation that you have to account for. So you're not really making 10% a year. So I like to be conservative and say, take that down to like more of like a 6% or so assumption of a rate of return that I can expect to generate from my assets. And so the thinking that you have to do is, all right, if you're generating 6% a year on your nest egg or whatever you have invested, and then you take a look at how much you need to spend a year, then you can kind of back into how much asset, like income generating assets you need in order to make more money faster than you are spending. And with that, once you reach a point where you can spend what you need to spend, but your assets will generate more than what you spend, that is the point that you can consider yourself financially independent. And for me, like I mentioned, I didn't think that I could hit that for a very long time. But once I started playing around with these different scenarios, what I found was that if I was deciding, I'm collecting rent on this investment property that I have. And I can continue to collect rent on that. And that's cash flow for me. So that cash flow contributes to me not having to tap into my nest egg as much. Or I could sell that home at age 49, and that can help tie me over to 59 and a half, when I can then start tapping into my retirement savings without a penalty. And it was that aha that helps me understand how much closer early retirement or financial independence was, and how much more it was in reach for me than I ever imagined. So that's why scenario planning and being able to see these numbers and your financial future on a page like this is so important, because you'll find that you can play around. You can say, all right, so if I don't buy a car every 5 years, if I buy a car every 10 years, what does that do to my numbers? How much closer does that get me to where I need to go? And that's how you can figure out what works for you. So once you have your scenario planning done and you know what it's going to take for you to get to your own FI number, then it's about investing, right? Or like, what do you're probably wondering, okay, how do I think about investing? And I like to keep it simple because, like I said, I have no interest in becoming an expert in the financial markets, but I am very interested in staying financially independent. So boring is better. Boring is better. Keep it simple and diversify. So mostly my portfolio in stocks is in index funds. Now, I'm not opposed to investing in areas where you have knowledge. For me, that's technology. Because my career was in tech, I have more knowledge than the average investor around technology. So I do have more, I skew a bit more in technology than maybe someone who doesn't have the knowledge or background in technology does. But for you, it may be a different industry that you have a lot of knowledge around, and you want to invest more than that, not more into that. And there's nothing wrong with that. I would just say, don't gamble what you can't afford to lose. So you've got this plan now, scenario planning, you know what it's going to take for you to get to financial independence. You don't want to gamble on things like crypto. So I'm not opposed to crypto. It's just that what I'm saying is, don't bet on it. So I keep a very small percentage of my portfolio in crypto. So small, it's probably been 2% or less. And it's so small that if I lost all of that it wouldn't really impact my financial plan. And so to me, it's like, yeah, right now crypto's on fire. But then there were times where it really hurt too to see crypto tumble like it did. So in order for it not to be super painful, then don't gamble. And also, don't time the market. So for the vast majority of us, 99% of us, will never be able to properly time the market. Even a lot of the banks, they have projections that you see they put out, and they're wrong most of the time. And so instead of timing the market or trying to guess when to buy low and sell high, instead, simply dollar cost average. And what that means is that you're buying when it's low, you're buying when it's high, and you just don't sell in your accumulating years. Treat it like that doesn't exist. Once you put it in the market, it doesn't exist. And so if you are salaried, what I did was just automatically, every time I got a paycheck, I put aside a percentage of my paycheck into the market, where it didn't matter what the market was doing at the time. Every month, I put in the same amount of money into the market. And that's what dollar cost averaging is about. So that over time, the market is going to go up, but you're not trying to figure out today, am I buying low? Am I selling high? When you don't time the market. So there's a lot more that we could talk about in this respect, but I think this gives you this sense of some of the ways, and hopefully just generating some ideas of how these concepts or mindset could apply to you? And what is your what is your version of Machu Picchu, this Machu Picchu trip? And what is your route in getting there? I hope that this kind of stems or gives you some ideas of starting to think for yourself and how you can get there. And the thing is, I'll leave you with this because we can plan, and hopefully you've seen through this how important the planning part is and how critical it is to becoming financially independent. But of course, there's no guarantees, and there are infinite possibilities of what can happen from here. So plan as best as you can, and then let the rest be up to the universe. I love Rumi's quote here in that life is a balance of holding on and letting go. So once you have the confidence in your plan, you just trust that you have what it takes to adjust if needed, and you're going to be just fine.
All right. Well, I think it's hilarious as I'm listening to you of that is great advice. I never followed any of it, and I did things completely opposite. So I think, but it's, to share my own path and way of thinking. I've always done stuff on my own. I made money not in the stock market, but investing into and creating deals and businesses around real estate, cash flowing through that. And I think at the end of the day, you have really two different directions. You're either building multiple streams of income that you're still enjoying passively, or you're creating capital wealth. And what I hear you talking a lot about is creating that capital wealth through the stock market, which is totally true. I mean, that's what most people do is they invest in their retirement accounts, their 401ks, buying into the mutual funds with a little bit of cash every day or every month. I went a direction of big bets of time, energy, cash. And sometimes it worked out unbelievably well, creating my own businesses, my own streams of income. Or in the real estate world, going big or going home. I didn't do the single family homes. Instead, I did the 100, 200 unit apartments. Of course, I couldn't afford it all myself. I would, bring together investors and we would invest as a group. But I think that kind of what my point is there's 1,000 different ways to slice it. And I love taking risks. I guess I'm the risk-loving guy. That crypto's been a fun ride. I didn't bet heavily on it, but it was a lot of fun when I found out that I had some Bitcoin left over in actually an offshore sports gambling site. Fun and exciting, didn't even know about it. So I guess my point being, love the information you're teaching. At the same time, going the exact opposite way, it also works at the end of the day. But I think you forgot about what I think is the best part of your story of taking off for almost 2 years and living around the world and just experiencing life. At the end of the day, isn't that kind of the goal of the mindset and the financial independence? So please tell us a little bit about that.
Sure. And I love that we have such different routes because that's exactly right, Nate. There's so many different ways. And that's what I was talking about with this Peru example is there's so many different routes you can take to get to the same destination. And I hope what people see is that these are just examples, and the way that you get there is unique and authentic to yourself. And that's going to be what gets you there. And that's going to be your best route as opposed to my best route. But to your point about what I did with that time and what I'm doing is, that's been a lot of fun. So I would say it was over the past 5 years that I started to transition into financial independence. It wasn't for me an overnight pull the plug. Uh, it wasn't just a switch that I flipped. So in 2017, I was working at Disney when I realized that was when I had my sort of aha moment that at the pace that I was going, that just sort of, as I mentioned in the beginning, sort of living for weekends and holidays just from being so burnt out, that I wasn't really taking the time to be present and enjoy what I was doing in that moment, that I decided I didn't know what I was going to do instead, but I knew that I needed to give myself some time to just regroup and recover from burnout to even figure out what I wanted or what I wanted to dream up next. And so with that, I looked at my savings and looked at how much time I could be comfortable with. And at this point, I didn't know any of the concepts of financial independence, retiring early. I just saw that I was comfortable with probably taking 12 months based on the mindset I'd been living by and already innately sort of reducing my expenses and increasing my income levels. I decided I was comfortable with taking about 12 months to 18 months to give myself this gift of complete freedom for that period of time. So during that time, I took a trip around the world. In 2019, I lived across 19 countries. I pretty much chased summer just to show. I mean, we grew up in Texas, so I'm definitely more of a summer person than a winter person, unless it has to do with snowboarding. But I chased summer around the world and lived in 19 countries, across 19 countries. And it was during that time that I started to pick up and learn a few other things along the way. Like I noticed that at the end of the 18 months, which it ended up being, my bank account or my net worth hadn't dropped. And I thought, wait a minute, how is that possible? And of course, in 2019, that was a really good year in the markets. But it gave me the sense that if I could just earn or generate returns like I did that year that were higher than the rate that I was spending, I could do this forever. And so that was kind of a light bulb that went off during that time. And then also just sort of from there, during the pandemic, I went on and chose to live in the middle of the desert in Joshua Tree, just for the adventure. So it's just been sort of a lot of adventuring along the way, because that's been my priority, is to get out there and live life the best way I know how, but also using this freedom of my time to journey inward and really reconnect my mind and my body, because I had gotten so used to being all in my head and analytical and using my brain for everything that I kind of forgot how to use my intuition. So a lot of it has been learning and growing, personal growth, as well as reading again and becoming a student again. I recently took an essay writing class that I loved learning from. It's a lot different, when you're learning by choice versus learning by just what everyone else does. Like in college, I couldn't wait to get out. But now it's like, I can't wait to learn more.
That's great. Well, I absolutely love kind of what you've been doing and your path and your track. And what do you see happening in the future for you?
I don't plan out too far now these days. I take it one step at a time, and I have really been enjoying connecting with people through opportunities like this, and speaking and writing have really helped connect me to people who are also ready to, what I call, ditch life's playbook and live a very intentional life. So I'm just following that guidance from within and seeing what happens. What about you, Nate? Since
Oh, I'm in my box that I love and what I enjoy and what I'm
yeah,
good at. So my plan went from retiring early, and I played that golf, 4 or 5 days a week for a few years, to I love what I do, and I never plan to retire. Different path, But that saying of if you love what you're doing, you never work a day in your life. I'm living that now, and I'm enjoying every moment of it.
Yeah, it's so amazing. And it's true, I've actually found that I enjoy work a lot more now too since I stepped away from it. And I think I mentioned earlier, I love taking on some consulting engagements and getting to work with people and being inspired and there's something to that energy about putting something out into the world with inspiring people and growing it together. So I can understand why, given what you've created for yourself, your family, and for your business, why you would never want to stop doing that.
Bingo. So different paths, same results. Well, I guess you're enjoying your time. I'm enjoying my time, but you know what? My time is still spent on the business, but in the areas that I know, like, and love.
Yeah. Yeah, I love that.
So, but thank you so much for coming on today, Jane.
My
Really appreciate
pleasure.
the education and your thoughts.
Love getting to chat with you, Nate.
Anytime. Thanks, y'all.
Thank you, everyone.